The U.S. stock market is showing renewed strength as the Dow Jones Industrial Average reached a fresh intraday record of 50,712.24 on Friday, climbing approximately 0.7%. The S&P 500 and Nasdaq Composite each added about 0.5%, signaling a broad-based rally across sectors. This comes after a record $550 billion in inflows at market open, pushing the S&P 500 into its longest weekly winning streak since 2023. The rally is unfolding ahead of the Memorial Day holiday, with markets balancing strong momentum against ongoing macroeconomic uncertainties. Can this upward trend continue despite rising oil prices and inflation concerns? For now, the answer appears cautiously optimistic, but with lingering risks. The Dow's recent climb highlights growing strength in industrial and cyclical stocks. Companies like Dell, HP, and Qualcomm have contributed to the broader market's gains, suggesting leadership is expanding beyond the dominant tech sector. That shift is significant because broader participation often signals a healthier and more sustainable rally. The S&P 500 is now on track for its 8th consecutive week of gains, a rare feat in recent years. This resilience is notable given the repeated macroeconomic shocks it. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Has faced, from inflation surges to shifting interest rate expectations. Meanwhile, the Nasdaq continues to inch higher, supported by steady demand for growth stocks, even as volatility emerges around major tech earnings reports. Oil prices remain a key factor influencing investor sentiment. West Texas Intermediate crude is trading near $97.60 per barrel, and Brent crude is above $104. These elevated levels are a marked increase from earlier in the year. Why does this matter? Higher oil prices directly influence inflation expectations, which in turn shape the trajectory of interest rates. Rising inflation could pressure central banks to maintain tighter monetary policy, potentially dampening market enthusiasm. Geopolitical tensions, particularly involving Iran, are also contributing to market volatility, adding another layer of uncertainty. Investors are watching closely to see whether the current rally can hold amid these pressures. The broader market's performance is being supported by a mix of strong earnings reports and sectoral diversification. Industrial and momentum stocks are gaining traction, while the tech sector remains a key underpinning despite some earnings volatility. This combination of factors is helping to sustain the rally, at least for now. However, the market remains in a delicate balancing act. While the S&P 500's 8-week winning streak is impressive, it is also unusual. Prolonged gains in equities can sometimes precede corrections, especially when macroeconomic risks remain unresolved. The key question is whether this rally is broad and sustainable, or if it is driven by a narrow set of stocks. So far, the data suggests broader participation, which is a positive sign for the market's health. Still, investors should remain cautious as inflation and interest rate expectations remain unresolved. The next signal to watch is how the market. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Reacts to the next major macroeconomic report and whether the current momentum can be maintained through the Memorial Day holiday period. If oil prices stabilize and inflation expectations moderate, that could provide additional support. Conversely, any renewed signs of economic slowdown or tightening from central banks could introduce volatility. For now, the market is showing strength, but the path forward remains uncertain. Investors will need to monitor both earnings performance and macroeconomic indicators to gauge whether this rally is here to stay, or if it is a temporary reprieve in a more volatile environment.